right now, as I take a look at this whole industry and I see what's going on, if it was me, this is the time I'd want to actually be investing. If you understand that these are just normal cycles, this is the time that you want to say, okay, maybe this is a good position for me to start dollar cost averaging and get into this game because I have a 3-year, 5-year, 10-year outlook. I don't want to just look at like 6 months to get rich, because guess what? Everybody who thinks like that, they're already wrecked.
How many people out there are willing to buy the lows? Do you ever meet that disciplined investor that says, okay, I am going to start dollar cost averaging at the lows?
No, you don't. That's how everybody gets into it, unfortunately. Bitcoin and crypto is a cruel mistress. What it'll do is it will lure you in with these promises of massive returns, and you get into it at pretty much the wrong time, because that is when it's the most sexy, when things are going up again. And people get into it, and I did the same thing. The same thing happened to me in 2017. That money that we put into crypto in 2017, now that it's February 2018, we're down about 80%. So here's our options. I can sell everything right now, and I can take a huge loss, and I can get out of here with my tail between my legs. But I'm not in the business of losing money. Here's what I'm gonna do. I'm going to start to dollar cost average, just like we do with different investment properties. We're going to slowly build into it. And then over time, we're going to reap the rewards. This is the opportunity, I think, for people to get in. And I'm not saying to sell your house and go all in. I'm just saying that this is probably one of those times that I would look very heavily into crypto and start to invest in those things, and only invest what you can afford to lose, of course.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go? This is London Real. I am Brian Rose. My guest today is... This is London Real. I am Brian Rose. My guest today is Rob Wolff, the entrepreneur, investor, and broadcaster. You are the founder and host of the Digital Asset News Channel, where you post daily updates addressing all the latest movements in the world of crypto with the goal of helping the average person better understand the markets and its cycles. Your early years were spent as a combat medic in the military before beginning a career in health management. Since then, you've become a prolific investor in both real estate and cryptocurrency. Today, your channel has amassed a huge following and is considered one of the most reliable and practical resources for both new and experienced investors alike. As an entrepreneur, you believe that cryptocurrency and Bitcoin will completely change the world as we know it, and that those with the right investment strategy can take advantage of the current bear market. Rob, welcome to London Real.
Brian, a pleasure. Thanks for having me on. I appreciate it.
Great having you here. Been loving a lot of the content you're producing in real time to talk about, let's be honest, the madness of the past 3 months. We've seen a lot happen in this space. Obviously, markets have come off, but it's also, been centered on a few protocols kind of coming into crisis, failure. And I don't know, I thought maybe we could start there because you've kind of gone deep on the Terra Luna phenomenon, the Celsius phenomena. We both had Mashinsky on the show in the past, and the Three Arrows phenomenon. And just wondering, maybe we start there, or maybe zoom out a little bit on the perspective of this year. I mean, would you definitely bring those protocols up when you wanted to tell the story of 2022, or is it more complex than that?
Well, I will say this. I don't know if I want to start there with somebody who's new to cryptocurrency to talk about, hey, what's a really good play is all these different protocols and projects that really almost collapse the whole market. I think I would start with a little bit as far as like history, start with Bitcoin, start with decentralization, start with the foundations of money, and then kind of work our way up from that. I think that there's a lot of good things in the space, but unfortunately, just like with growing pains, just like we saw with the advent of the internet. There was a lot of bad players in the beginning, and we had to shuffle those people out to grow. And I think these projects, I mean, the Terra Luna, the Three Arrows Capital, unfortunately, with the Three Arrows Capital, with that contagion going around, it's like a tentacle getting into all these different projects, kind of collapsing or really pulling back a lot of things. So right now, as I take a look at this whole industry and I see what's going on, if it was me, this is the time I'd want to actually be investing, which would be the exact opposite a lot of people do. They look at things and go, well, here's an example. 2017, numbers go up. Everything is great. I'm going to get on top of that train. And we both know this is how people operate. They go, it's going up. I'm going to ride this train all the way to the top, and then I'm going to follow it all the way down because I don't understand some basic principles. So right now, as everything is going down, and let me be clear, 100% clear. I know people would like me to say that this is going to just be a V-shaped recovery and it's going to be awesome. I don't believe that. I think there's a lot of problems with Three Arrows Capital and the tentacles that they had and the billions of dollars that they pulled in, and they can't pay all these loans back. It's going to start to collapse even more projects. And then the problem with when projects collapse, the valuations go down, and the VCs that invested into these protocols, and this could be top 20, top 50, there's these things called unlock periods. And then as those start to unlock, then there's only one place that's truly liquid, open 24/7, 365. And that's Forex and also crypto. So I think there's a little bit more downside pain. But if you understand that these are just normal cycles, this is the time that you want to say, okay, maybe this is a good position for me to start dollar cost averaging and get into this game because I have a 3-year, 5-year, 10-year outlook. I don't want to just look at like 6 months to get rich, because guess what? Everybody who thinks like that, they're already wrecked.
And how many people out there are willing to buy the lows? These are the people that would have, because there's not many people that don't get excited by that FOMO, and they probably have heard of crypto before, which means they probably would have gotten into that. Very few people are just hearing about it now. So do you ever meet that disciplined investor that says, okay, I am going to start dollar cost averaging at the lows?
No, you don't, because that's how that's how everybody gets into it. Unfortunately, this is Bitcoin and crypto is a cruel mistress. What it'll do is it will lure you in with these promises of massive returns and asymmetrical returns in investing, and you get into it at pretty much the wrong time, because that is when it's the most sexy, when things are going up again. And people get into it. And I did the same thing. The same thing happened to me in 2017. And that's one of the reasons why I started this channel, because in 2017, when I got in, I had heard that Bitcoin was going to $1 million and it was going to just keep rocketing up. And I heard this from a lot of people. Now, even people like John McAfee, he wouldn't lie to me, but here we are. And then it goes up and then it goes down. And then before you know it, you got people saying, don't worry, it'll just rebound. And it never rebounds because there's this thing called crypto winter. So for me, what I did when I started to invest, because mostly before, again, it was real estate investment. And I thought, well, I'm just going to apply the same principles over there over time. And if I can just ride it out, I think things will be okay. So I told my wife, I said, look, that money that we put into crypto in 2017, now that it's February 2018, we're down about 80%. So here's our options. I can sell everything right now and I can take a huge loss and I can get out of here with my tail between my legs. But I'm not in the business of losing money. Here's what I'm going to do. I'm going to start to dollar cost average, just like we do with different investment properties. We're going to slowly build into it. And then over time, we're going to reap the rewards. I don't know if it's going to come back, because in 2017, we didn't have the president of the United States talking about crypto. We didn't have the SEC really clamping down, or Congress having hearings and things really moving. We didn't have the Paul Tudor Jones, the big investments, the Brian Roses coming in talking about crypto and those types of things. We didn't have that. We just had a belief that maybe this would be a new type of monetary system. Now, fast forward to today, I mean, things are completely changed. If it was me and I see that where they are, this is the opportunity, I think, for people to get in. And I'm not saying to, sell your house and go all in. I'm just saying that this is probably one of those times that I would look very heavily into crypto and start to invest in those things, and only invest what you can afford to lose, of course. So what I see is people are not going to get in. People like me and you and people watching your show, they're going to understand these processes and say, you know what? This is the time when everybody gets rich in the bear market. Nobody gets rich in the bull market. It's when they just start to accumulate at this time. And that's where all the money's made. And then what'll happen is it's very boring. People will get into it. Another bull run will come. I believe in the 4-year cycles. So once that happens, people will start to sell off. They'll unlock or they'll start to sell as things go up. And as things go down, then all the people that come in 2024 and 25, they're going to be the people like me in 2017.
Right. So you've been through this cycle, so you can speak with knowledge and experience and tell people that this is the time to build.
Yeah. I mean, I think here's the thing. You know that people who watch our show, it's not just the heavy investors. It's not the people who are extravagantly rich. I've got people who watch my show who are doctors and lawyers, and people are doing pretty well off. And I've also got a lot of people on my show who are young kids, 18, 19, 20, are just getting into the game. There is really no way to become financially independent through a job. And I call a job just over broke. That's really what it stands for. Because to really get into that is a very difficult situation. So I think you have to do some type of investing, whether that be equities, securities, whether that be with crypto, whether that be with real estate, REITs. It's all into the person who, what they see themselves investing into and what they feel a connection to and where they can actually put their passion into. But in all honesty, for people to not invest, I think is a mistake on a lot of different levels.
Yeah, Robert Kiyosaki was in the studio, author of Rich Dad, Poor Dad, and he said, Brian, poor people work for money and rich people make money work for them. And you know that from the real estate game and the crypto game. And it's well said. You're right. If you just have a job, it's probably not the way you're going to become wealthy. It's going to be done on the back of probably investment in assets.
Right. Yeah. Like I get emails all the time. Like I had a guy a couple of weeks ago. He said, "Hey, I'm a plastic facial surgeon, and I'm just getting into crypto and digital assets. I like your channel, and I just want to see if you have any advice for me." First of all, I can't give anybody advice. I'm not a financial advisor. However, I tell the same thing that I tell you. I think this is one of those good times to start to dollar cost average and get into it. Learn about it, and this is why you have your DeFi Academy. This is why I have my free 100% free website, DANTeachesCrypto.com, just to come in there and learn about the different crypto, the projects, how to do your own research, so you don't even have to rely on people like me. You can go out there and go, okay, this is what I'm looking for. I'm looking forward to see how big is the community? What is the utility? What does it actually do? Take a look at the tokenomics. Am I going to get dumped on? And how much is the actual circulating supply? And also take a look at the team. What have they done before to potentially what they could do in the future? And these are just some of the basic things to look at, because it's a new industry. It's not like valuating stocks and saying, well, let's just take a look at the PE ratio. Let's take a look at 12 months back or what the earnings report says. It's not as simplified as that. There's a lot of nuances to this, and there's a lot of education that needs to be done.
And that's your CUT system: community, utility, technology, tokenomics, your CUTT? Okay.
Right. And so when I first got in, I just thought, well, whatever I hear about on YouTube and Twitter and the Twitterverse, maybe that'll be a good project. I didn't do it too much education. And I can tell you right now, there's a lot of people out there that are in the same boat right now today, because unfortunately, this is going to be unpopular. There's a lot of people out there that are just pumping and dumping stuff, and they're just worthless. They're just worthless cryptos. I'll be honest with you. There's like 19,000 crypto digital assets, and they're all going to be, the majority are going to go away because they don't really have any utility. So what I took a look at is, as these new projects come into formation, there's a system that I took a look at and said, well, how can I evaluate this? Because I can't do, again, like the PE ratio. I can't take a look at the spreadsheets. I can't take a look at the SEC filings because there are no filings. There are nothing like that. But what I can take a look at is as these projects come into the cryptoverse, let's take a look at the community. How big is it? And in the old days, in the boom of 2017 ICOs, when that was just the biggest pump and dump of all time, there was no community. All they would do was reach out to people to shill all the different projects. And then people like me would watch those videos and go, oh, that looks pretty good. And then we would get dumped on. And that was one of the reasons why I started the channel, because that just cannot go on. That's a recipe for a disaster. So what I take a look at is the community now. And like one of the projects we took a look at, and I haven't done this many. We've only done 4 on our channel, on our second channel. One of those was Genso Kishi. And that was a project that had already been a free-to-play game. It was called Elemental Knights, and it already had millions of players. This is in mostly Asian countries. It was on PlayStation, it was on Nintendo Switch, iOS, and Android. So I already had millions of community members who were going, wow, this is pretty fun to play for free. Now you're going to go for play to earn, and I'll just switch over to that because I like making money. I like this game. So then we took a look at the utility. What does this token do? Well, in this metaverse, in this game, it would actually drive the whole ecosystem. Then we took a look at the team. Well, they had already been building on all these different platforms. So it was like a no-brainer. And the tokenomics, we took a look at what was the cliff, when are the unlock schedules, and what was the max supply? So am I going to get dumped on? And that was in December. And it started out at like a penny, and it went up to $1.45. Now, because of this bear market, we're down to around 40 cents, but it is still one of my best performing players on my portfolio. And then we just moved down the line, and now we're on our 4th one where we're talking about Sweatcoin, which we did a deep dive on that, but that won't be out until the weekend.
Until the weekend. Nice. All right. So the cut system seems to do you pretty well for kind of giving a deep dive, but not too deep, to evaluating different protocols and coins and giving you a kind of a good initial reaction.
Right. But I have to make a distinction. And that is just for projects that are really coming out and are new. So let's fast forward. Let's take a look at a project like Celsius. With Celsius, which just pretty much collapsed, they had stopped all the withdrawals, and you had over $8 or $10 billion in assets under management in that platform. It was a lending platform. And if you took a look at the cut, you'd say, well, how does that compare? The thing is, with the cut system, that's only for the introduction of these new projects. Existing projects, it's pretty much out the window. You have to be on top, just like, well, Brian, just like you have to be on top of all of your investments at all times. You have to get all the news, all the information that you want to do. Because if you leave it up to happenstance and just say, well, I think it's going to do well, and I'll just kind of forget it, set it and forget it, like the food dehydrator, you're going to be in a world of hurt. And that's exactly what happened with Celsius. As time went on, you could see that there was some issues. There was some illiquidity, insolvency. And of course, they also had issues with Three Arrows Capital and the lending platform. And then even going down to Luna and UST. There's a lot of different theories about it. And from what I can understand is that they didn't invest per se into the Terra ecosystem, the Luna coin, or into UST. But there was again, this is all hearsay. There was a lot of different organizations, institutions who wanted to do like a bailout. And they asked, Celsius was one of them. And they said, no, we're not going to do that because it's more important for our community to be taken care of first. And that was a chain reaction, which I don't want to get into because I don't want to get sued. So we'll just go down that way. But if you take a look at the cut system for them, their community is huge. They have over 1 million different people. The utility for the token itself, when you actually invest into it and put on the platform, the higher the amount of Celsius you had, the more the rewards that you would get back for the different cryptos that you would actually put on there, which they, of course, rehypothecated. And unfortunately, I think there was some issues with some fractional lending, which I think is one of the issues. But the utility was there. The team was stellar. You had Alex Mashinsky. He was not solely, but at least partially responsible for voice over internet protocol. He had 3 companies with $1 billion exits. And then the tokenomics were pretty good. However, that's just for the beginning. Moving forward, to take a look at it, well, what was going on behind the scenes? And these are the things that you really can only get just by the news that comes out. And you can take a look at an on-chain analysis to see just exactly where these wallets are and what's actually happening as far as who is selling. And that's a whole different other video.
Yeah, it's a pretty good analysis of what I believe happened or heard that happened. I mean, again, we talked about in the beginning of the show, and maybe we should talk about it now. We had obviously Terra Luna, which maybe we'll talk a little bit about, that really collapsed. It was the algorithmic stablecoin of choice, and a lot of money in it, and then it came off pretty quick, which then caused more selling into the market of all their reserves. Then obviously later Celsius got under pressure, and maybe there was positions in there, maybe some fractional lending, maybe some staked ETH versus ETH positions, and maybe some also not malicious actors, but people doing some dumping on there. They had to suspend everything. And then obviously later we saw Three Arrows go down, which reminds me more of like a long-term capital management, which I saw go under in 1998, which was again, some of the smartest guys in the world, Nobel Prize winners, former Wall Street heavyweights out in Connecticut with a hedge fund with massive amounts of leverage. We thought they couldn't do anything wrong. And then all of a sudden they were over leveraged and they pulled markets down. And, you know, I think it was the Russian crisis that kind of forced their positions. And then it just all fell apart. And they were supposed to be the smartest guys in the world. And they took the market down with them. And I don't know if you'd compare that to Three Arrows, but Three Arrows sounds like it was highly over leveraged, not very well regulated. And it seems like it pulled a few things down and maybe might more in the future. How's my assessment of those three events?
Pretty good. And I'm not going to talk to any particularities because there's a lot of different theories that are thrown out there. But I will say this, that one part you talked about as far as leverage, that is a big thing. And I think there's three paths to ruination. This is what Charlie Munger talks about. There's ladies, liquor, and leverage. And if you can remember that, I think that will cause you a little bit of pause when you go, maybe I should go 25x, 50x, or 100x in this position because I'm going to make a ton of money. I don't think that is the play. So for me, like on my channel, I just have certain rules. One of those is take profits. Nobody ever want broke taking profits. No leverage. You can get away with it. Don't keep anything on exchanges right now, especially. You don't know what's going to happen with the 3AC contagion. Also, don't invest more than you can afford to lose. And the last one is everything's a scam, meaning treat everything like a scam until you do your own research and prove it otherwise. If you can follow those 5 rules, things tend to work themselves out. I know it's very boring and it's not very exciting, but it's done pretty well for me so far. And I will say, like, even with Celsius, I went to Consensus at Austin and met a lot of great people there, a lot of people in a lot of the upper projects. And there was a lot of buzz when I talked to them about Celsius when we were there. And that was on June 9th and 10th. 11th, I drove back home because it was in Austin, went to Texas, did a video on Celsius, said there's something up with Celsius. And I think you should take your crypto off. That was at 11 a.m. At 9 p.m., roughly, they stopped all withdrawals. So these are the things, like, even though you think like the team is great, like the example you gave, the smartest people in the room, you have to be on top of things because this is the people watching this video. This is your money. And if you don't watch it, who's going to?
Yeah, well said. Those are great rules, very, very great rules. And obviously now they've been proven pretty correct as well as these markets came off. Rob, you've said before that we need a crypto recession. I've never really heard anyone say that. What do you mean by that?
Well, this is great because this is, again, not very popular, but it has to happen because the projects that are out there, if you really take a real look at them, like, what do they do? And how stable are they? And really, are they just here for a cash grab? I can tell you, if you really dive deep into a lot of them, you'll see that is exactly what it is. So now we have, first of all, we were at $3.2 trillion market cap. That was one of the higher points. And that was in May 2021. Now we are below $1 trillion market cap. And a lot of these smaller cap type of projects, they are just kind of sitting there with liquidity. They're not really doing anything. They're pulling people in. And I don't think they're actually here to actually build and get the rails going to actually give us to that next level. So when I say there needs to be a recession, I think these projects that are just there, I think a lot of them need to go away. And if they don't go away, I think what will really help is regulation. And again, we know that regulation is coming whether we like it or not. So we have to accept it. Give me the rules of what I need to do so I can bend the rules and then just go from there. So if I have if I have the SEC coming in, and they say, look, these are securities. You need to register with the SEC. You need to fill all this paperwork. You're going to get our lawyers involved. You're going to have to actually pay up a bunch of money to actually get this whole project going. A lot of those projects, they're not going to make it. So what they're going to do is that they're going to fall away, or what I think is most likely to happen is what happened with Amazon in the early 2000s. They're going to say, look, we got a lot of capital here. We want to buy up these warehouses. We want to buy up Zappos. We want to buy up these companies. And just absorb these other entities to become even bigger. And I think that's what's going to happen with some of these top 10, top 20 cryptos. They're going to say, look, we need developers, we need brain power, we need the things that you guys are doing, maybe not too well, and we want to absorb you into our ecosystem. And I think that is why we need a recession, so we can just solidify and we can come back stronger. And that's where I think all the growth really does come from.
If you're talking those top 10 or 15, then you're pretty much talking about these layer one protocols, perhaps. Perhaps. And maybe we can talk about them. I was fortunate enough to have a bunch of the layer one CEOs on the show. I had Emin Gunseer of AVAX and John Wu as co-founder. And we had the Hedera Hashgraphs on. I had Justin Sonatron and a couple others. And, you know, they all had a consensus algo that they thought was the best. And they all were building something that we all needed, right? We needed something that was faster and cheaper. And yeah, I was always impressed by the brain power. But I also asked them, like, how many are we going to need? And probably they said probably a handful, you know, or keep them on one hand. Do you think that some of those will survive, consolidate others, and be kind of the blockchains of the future? And again, Cardano and DOT could be in there as well. Is that what you're kind of saying? Or were you also talking about like maybe a Sandbox that does the same thing?
I think if you take a look at, well, yeah, I mean, if we break it all down to the different categories, because not all cryptocurrencies and digital asset projects are created equal. So you have these layer one protocols with which everything builds upon. So it's like, and one of the things for people watching the video right now is that who got rich in the California gold rush? Was it the prospectors that came out there? Or was it the people that actually sold them the picks and shovels? Obviously, picks and shovels. So if you want to take a look at layer ones, the things that are being built on, that's why Ethereum does so well, because everything was built on Ethereum, and it's still being built on Ethereum. Unfortunately, I don't know if that merge is actually going to happen sometime this millennia, but hopefully we go. So yeah, I think some of these layer ones, it'll be somebody taking the lion's share, and then there'll be people or products underneath. And I think Ethereum will do quite well. And again, if you take a look at like the team, the people behind it, like Dr. Gavin Wood for Polkadot. He was a part of Ethereum. He's already built or been a part of that ecosystem. So he knows what to do and how to actually make it go. So that's why I like Polkadot. Cardano, people don't like. Some people love Cardano or they hate Cardano, but Charles Hoskinson, again, was part of the Ethereum mafia, as I call him. So that could do pretty well. And then, of course, Avalanche, they got a really good system, and it seems like it could do quite well. Again, who knows? And then, of course, we got Solana, one of the new kids in the block that does pretty well. It does concern me that they've had a couple of stoppages, but maybe they can fix that because they're in beta. So for all these things that are going on, this is why you have to diversify, right? I don't think that I can tell you I won't put all my eggs in one basket and go, this is the winner, because I have no idea. And anybody out there on YouTube or Twitter or any kind of guru that says this is going to be the one is full of it. They have no idea what they're talking about. This is just, they're just speculation, and we go from there. So that's just the layer ones. But if we take a look back to, going below the top 20, what about metaverse plays? What about the Sandbox? What about Engine? What about all the other cryptos that could potentially power these metaverse plays? This is even riskier. Because do you know of any metaverse that is really doing great, well, and just taking off? I don't know any of them yet. And I think that that's going to be maybe a 3-year, 5-year play before we figure out which one could actually be it. So this is, and maybe the next one isn't even being built. So all these projects that you have, just again, if you're taking a look at it, take a look at the cut. How big is the community that kind of drives things? Utility, team, and tokenomics. Just go from there. So if I had to invest, Bitcoin, Ethereum, Polkadot, Cardano, Avalanche, little Solana, and some other stuff. That's all I'll say.
And no metaverse play? No Sandbox?
I had Sandbox. I've seen Sandbox, and it could, because it has a lot of people behind it, but I hold very, very little. I sold a chunk of it because when I look at these things, in 2017, you could see that the things that people were talking about, it was just hopes and dreams and white papers. And I kind of saw that in 2021, where I thought to myself, does this stuff really do anything yet? Are we really capturing a huge amount of the market share for what this is supposed to do? I didn't see it yet. Maybe in the next one. So Sandbox, I've sold a little bit off, but it could be the next great one. Don't know.
Yeah, a bunch of my students are in the Sandbox. They're buying big plots of land together and developing mansions. And I've been in on the alpha runs and I've been seeing what they're doing. And, it's still early days, but I got a little love for the Sandbox because, it seems to bring a lot of people in and brings people building projects. And I can see where it needs to go. It's not really there yet, but I can see where it's kind of going. So I know what you mean by that.
And sorry, Brian, that's smart because like the land development, we like real estate. Real estate works out pretty well. And that's in the physical real estate realm. But in Sandbox, I've got a couple plots right now that I probably won't sell for quite some time because I don't know what's going to happen with that. Maybe advertisements, maybe we set up some kind of, like you said, mansions or business type of thing where people go in there and do virtual meetings. I don't know. So I'll just stick on with that and just pretty much forget about it. And then just go from there. I will keep following up with the Sandbox just to make sure they don't collapse or something. But I think owning some virtual land, I think is a pretty good play for the long term. So short term, medium term, long term plays.
Yeah, I think you're right. I think some land will be good. It's come off quite a bit. And yeah, I know what you mean with metaverse. I mean, 5-10 years from now, I think we all believe there will be real viable metaverses that we spend a lot of time in. So does Zuckerberg. But right now, they're not there per se. But
have you used those goggles, the virtual reality goggles?
I have.
What do you think?
I actually started playing the whole Oculus game a couple of years ago when a bunch of people here at the team had them. And I'll tell you, Rob, the thing I loved the most was just hanging out in the house in the very beginning, like not even going across the Niagara Falls and all this crazy stuff, but just sitting in this like kind of very calm house that was like overlooking some valley and the sunset and stuff. And I found it quite, meditative, if that's a word. And otherwise, I found it interesting. The thing I noticed, Rob, is that after a week, when I came home, I chose not to put it on and I chose to watch something on like YouTube or something. And I noticed, wow, I guess I don't like it that much because I don't feel like sticking it on my head every night. So that was interesting.
Yeah, it's just like the internet. When you try to use a browser back in the early days of the internet, it was an awful experience. Everything was like pixelated and it was very condensed, not to what we see today. So like those Oculus headsets and the things that are coming out, that has to change radically. Maybe augmented reality is the next big thing. Maybe just some overlays, but not the goggles to actually push it to the forefront.
Yeah, that's probably true. I mean, it had to be kind of hardcore and they are novel, but like I said, I don't think it's something people stick on every night when you get home. So it is a novelty. AR, yeah, you definitely think that's happening. And rumors are that it will. And when Apple gets involved, it will happen, I think, because they'll probably bring a decent product to market. We'll see. I had in the early days one of the guys from Google on the show, and he brought one of those Google glasses. And I said to him, you know what you call people that use those? He said, what's that? You call them a glass hole. And he said, yeah, I've heard that. So it was fun to play with, but it never made it to production. So we'll see what happens. Yeah. It's going to be kind of interesting for sure. But we'll keep it on the space. I've had some good people on the show talking about metaverses, like the Illuvium guys and some of the other people as well. So it's impressive what they're building. It's going to be slower now, obviously, but kind of we'll see. Rob, Bitcoin. You haven't told me much about how you feel about Bitcoin. How do you feel about the OG digital gold, digital asset play? In reference to all the other coins you just mentioned.
The Bitcoin maxis are going to love this statement. As I get into crypto and digital assets, and the more time I spend here, the more I become more of a Bitcoin maximalist. Because when you take a look at what has longevity and what has been around and stood the test of time, these are the risk on and risk off assets. And Bitcoin is the least risky asset in the riskiest market. So when I take a look at Bitcoin, it's a funny thing because when I first got in, we heard that it was a cryptocurrency and you could shoot it around the world and you could pay for all these things, even if you wanted a cup of coffee. Well, we found out very quickly that as the market cap grew and people started to open up more wallets and they started to actually use it, it wasn't a great payment system. It was expensive and it was super slow. Then, of course, Segwin came around, and then all of a sudden the Lightning Network came up. And then we found out that, yeah, I guess it really can be used for currency. We're seeing it in El Salvador. We're seeing it in a lot of different countries being used. And I think it's a lot better thing than remittance payments, where you have to spend for Western Union to send back money back to your original country. So when I take a look at this, I just think it's technology that will probably do well in the future. We just don't know exactly what to do with it. Mark Moss had a great quote. He said he talked about steel in the early days of man. When we discovered steel, he said, well, we made swords and arrow tips, and that was nice. That helped us out with wars and conquering different lands. Then we started to, build buildings. And then we thought, well, maybe we can make it bigger. And we made skyscrapers. And then we thought, maybe we can go to the moon. And we made space shuttles out of steel. So the same thing with Bitcoin and decentralization, and maybe just using Bitcoin as a protocol to build everything on top of it, because it's the most secure network on the planet. Again, I don't know where it's going to lead to, but I can tell you as time moves on, my portfolio right now is 75, 80% Bitcoin, Ethereum, because it's the safest play in the most volatile market.
Very interesting. I've had quite a bunch of Maxis on my show, including including goddamn Kaiser back in 2013 when he came on my show screaming about Bitcoin, and I bought some Bitcoin back then, and he refused to come on my show the last year because I talk about anything but Bitcoin. But I've had a lot of Maxis on here, including Michael Saylor, who actually, interestingly enough, I wouldn't call him a Maxi, because at the end of the show, he said there is a place for a digital currency. He said Bitcoin is digital property, but like you said, people don't want to use it as a currency because they don't want to sell it. And he said there is a place for digital currency. And I was like, well, that has to be kind of a programmable contract. And he's like, well, yeah, it probably does. So I understand why he doesn't own it, because he likes to have something that probably goes under the regulator's eyes, and we can talk about our buddy Gary shortly. But yeah, I've had quite a few.
Watches this show.
Oh, Gary does. Yeah, I know. I'm sure he watches this show as well. We'll talk about regulation and Gary and the SEC. But yeah, I mean, it's great to talk to Bitcoin Maxis. Sometimes it's frustrating when they give no time to anything but Bitcoin, and it can be a bit frustrating when they don't acknowledge there's something there with Ethereum, or maybe with Metaverse, or maybe an NFT might be some use in the future, even if it represents a property or my identity or my medical history. So sometimes it's hard. They end up just talking about fiat currencies and freedom, which I like freedom too. But it's interesting having those conversations. You mentioned Ethereum as one of your also basics that you have. Mike Novogratz was at Token 2049 conference here in London, and he said, look, Bitcoin's digital gold, Ethereum's digital tech. He's like, if you want a digital technology play with the leverage of that play, then you want to be in the Ethereum. How do you look at it with your portfolio? Because I thought you were just going to say 80% of my portfolio is Bitcoin only.
No, because again, like if you take a look at, I think Bitcoin has its place. Again, we don't know exactly how great this technology will be, but if you just take a look at if you go to CoinGecko and you click on ERC20 tokens, it's like the entire crypto economy. I mean, everything is built on Ethereum right now. So I know people will say, and even I have been critical about this, about moving from proof of work from Ethereum to proof of stake. And we were talking to Simon Dixon yesterday and his Celsius recovery plan. And he was an early investor in the ICO days of Ethereum. And he said, in the white paper that they gave us, they said within the next year, they were going to move from ETH to ETH 2.0. And that was, years and years ago. So that I'm not too confident that's going to actually happen. And then another thing is that people have to understand is that there's three parts to it. And the second part hasn't even come up. The merge is supposed to happen in August. And that won't reduce the fees. That won't reduce some of the problems that are going on, but it will hopefully get them off from proof of work to proof of stake. But when I take a look at what's being built on it, it's all these different projects. And at some point, they may move on to like a Cosmos or to like an Avalanche or a Solana or something like that. But right now, in the short-term play, I think they're just there. They're using ERC20 tokens and the Ethereum platform to grow. I don't know what's going to happen in the future, but right now, this is where we're at. So I'll stick with where we're at for right now. Now, things will change. It's not about flip-flopping. It's about keeping on those investments, making sure you know exactly what's going on. And if some great project comes out where people can just switch over, then off I go from Ethereum.
Yeah, I've called Ethereum the Microsoft Office of the smart contract space. And it might not be the best tech, but it's what everyone's using. So guess what? It's got the market share, and you're going to use it too. The biggest complaint I get in my Crypto and DeFi Academy is the gas fees, because we use Ethereum for getting everybody up the curve on yield swapping, liquidity pools, and all things DeFi. And they constantly complain because we start very small and get people to just understand the protocols. And sometimes the gas is more expensive than the actual trade notional. And I just say, look, it's not gas, it's tuition. So it's a learning experience, just pay it. And in the future, we will hopefully have either proof of stake ETH or things like AVAX where you can plug in and do it quicker. But in the meantime, I'd rather you just get to know it and pay the gas. But yeah. It's something that people are concerned about. And again, I'm not going to hold my breath for the 2.0 merge. I mean, I had Stanley Kulichev of Aave in the studio last year, and they don't even think they had integrated AVAX in the Aave yet. And I said, when's ETH 2.0 coming? And he said, sometime this decade. And he laughed. And again, he was highly invested in that protocol. So yeah, I think you're right. It's definitely one of the blue chips for now, or the least volatile of volatile cryptos. And like you said, probably what people are going to develop on for the next year, right?
Right. Right now you've got a lot of those layer ones and they're doing pretty well. But just take a look at the different issues. And we talked about Solana. And of course, if you're really big into decentralization, they have an issue where sometimes they go down, whether that be just DDoS attacks or other issues that go on behind the scenes. They have had a point where they've had to suspend the network. And what do? They contact the validators and say, we need to restart. That doesn't sound very decentralized to me. However, does that mean that that's what it's going to be like for the entire time that Solana is around this earth? Probably not. So as time goes on, they'll probably do pretty well. And then for these other protocols, they're just kind of finding their legs, and of course they want people to build on their platform so they can grow their ecosystem. Unfortunately, they are behind the ball right now because they're just trying to get these new projects in. And that, I think, if you really want to take a look at the next big project, just take a look at the ecosystem and what is being built on it. And the best place to find that information, just go to Twitter and follow Avalanche, follow Solana, follow Polkadot. And you'll see that they always put out their updates for the ecosystems, right? A nice graph, very easy to take a look at and go, oh, they've grown from 1,000 to 2,000 different protocols. So that's just something I would take a look at.
Yeah, well said. I've got some pretty high-level people in my Kings of DeFi group inside my academy, and they said that stablecoin regulation is happening before year-end in the States. And I'm wondering if you think that's true, and can you comment on that? Has that been accelerated by Terra Luna? And what's the status of that? And then we'll get it to Nick Gensler after that.
Yeah, so take a look at all the things that people will consider bad. Bear market, bad. These stablecoin issue, this is bad. Projects and us going to recession, bad. You can take a look at it both ways. For me, when I take a look at the market going down, I'm like, this is good. This is good because now I don't have to pay so much for these cryptos. I can get a nice deal as they move forward. And then for a recession, well, if you play your cards right and you're sitting on, I hate to say it, cash is kind of king, and you're waiting for some crashes, this is, and Robert Kiyosaki will talk about this all the time, this is where kings are made, in these recessions and these bear markets. So for the collapse of Luna, then people say, well, that's bad. That's bad for a lot of people because they lost, because they went against the rule, which is they invested more than they can afford to lose. And they put too much in. And unfortunately, a lot of people lost a lot of money. That's bad. But what's good is that this regulation not finally, I would say Congress and the American government takes steps up and says, hold on, wait a second. These are stable coins. They're supposed to be backed by something, not algorithmically, but can you show us what it's actually being?
To continue watching the rest of the episode for free, visit our website, londonreal.tv, or click the link in the description below.